What's going on, y'all? It's TALA. This is gonna be a sequel to my last video, where basically I'm just gonna go over the basics of day trading, for those of you that are completely lost and have no idea what you're even looking at. If you already know like the basics and stuff, feel free to just skip this video. So let's kind of just go ahead and get straight into it. So this platform I have here is TradingView. This is the best platform in my opinion to kind of just look at everything. So even for example, if you trade on a prop firm or something down the line, this is just a really great place to pretty much just do your charting and everything like that. By the way, guys, if you see I'm in a trade, this is a paper trade, it's nothing, just don't worry about it, ignore it. I'm just testing this squeeze right now for when I trade tomorrow morning. Right, so let's just get into the basics. So go into a 4 hour. So what is a candle, right? What do each of these individual candles mean, and what does it mean when I say I'm going to 4 hour? Right, this is a red candle and this is a blue candle. Okay, so a green candle is what we call a bullish candle, meaning price closes higher than it opens. And a red candle is a bearish candle, meaning price closes lower than it opens. Right? A red candle means sellers had control. A green candle means buyers had control. Now, what are the lines above and below it? This line above is kind of just gives you like the history of the wick, right? So what really happened, right? On a green candle, the lower part of the candle where the rectangle starts, that's where price started, right? When this candle opened, it opened here. The top of the green candle is the top of the rectangle is where price closed, right? Now this wick is, while this candle was essentially running, the price had reached up to here but came back down. And the same for the bottom candle. Price had gone all the way down to there but ended up closing up here. And normally for a green candle, price goes down first, then goes all the way up, then closed over here, right? Now, the opposite is true for a red candle, right? The same thing about the upper and the lower wick. This is price pushed up to that point, price pushed all the way down to that point, right? But on a red candle, price opened at the top of the rectangle and closed at the bottom of the rectangle, right? And for these red candles, normally what happens is price pushed up to the top of this wick, pushed all the way down to the bottom of this wick, and then closed right here. Okay, that's pretty much all you need to know for candles and wicks, right? Now, I'm not going to get into too much detail about the different kinds of candles, but I'll give you some of the basics, right? So the bigger the candle, obviously the bigger the momentum, right? We see this huge red candle. That means sellers had full control of price during this 4 hour candle, right? And you can see that they continue to hold control. This is what we call a bearish engulfing candle. It engulfs the previous candle and even the one before it, and most of the next one as well. That's a good sign that price is going to continue in the direction of this candle, right? As we can see, price continues to go down, go down, go down. Then we see an engulfing bullish candle, a bullish engulfing, meaning it engulfed the last one and engulfed most of the second one as well, right? And then we can see that the bullish continues. This one doesn't engulf, continues, and then you see over here it retraces. Now, you might be wondering, well, how do you know that this is not going to continue down? You see how big these lower wicks are, right? This is a really good sign that price is going to retrace. You see a huge lower wick. That means sellers tried their best to keep price going down, but buyers stepped in and moved price back up. Now, going back to trading psychology, this is why you never enter a trade too early, right? Because if you enter just off of that to try and get the best fill possible, you would have gotten absolutely stopped out by price here, because this candle kept going all the way down here, and it tapped into this supply zone or demand zone. We'll talk about that in a different video though. But essentially, if you had waited for this candle to close, then when it closed right here, that was a good signal to enter and go long, right? A huge lower wick is a very good sign that price is going to reverse and go up, right? And the same for a huge upper wick, although it barely went down here, right? But let's see if there's a better example somewhere of a big upper wick. Oh, right here. Big upper wick, price absolutely shoots down, right? Next, right here, big upper wick, price shoots down. Big lower wick, price shoots up. You know, it's very common trend. If we come down here, yep, 2 huge wicks going down, price reversal. It's a very good it's a very good sign price is about to reverse. Because essentially what's happening is price is going all the way down here, sweeping all the people down here. There's definitely like some sort of liquidity zone down here, which is probably from this prior wick, and it's basically coming down to get more money. Money is momentum. Money is power in the market. It comes to get more money so it can launch the opposite direction, right? And don't be scared by these two going down. That's nothing. It keeps following the trend, right? Essentially, you see there's no huge upper wick. You can tell that this is a retracement. It's just retracing and then it's continuing back up, right? There's no engulfing red behavior, but you do see the green engulf the 2 reds, right? You see 2 more reds, doesn't engulf the green, next green is engulfing. Good signs that it's going to continue bullish. Now, what are the different time frames? So each of these candles covers a certain amount of time, right? For example, this candle, I'm highlighted over it. It shows Monday, September 22nd at 10 a.m. So basically, this candle opened up at 10 a.m. and this is a 4-hour time frame. So that means this candle started at 10 a.m., ended at, what is 4 hours? 2 p.m., right? That means this next candle started at 2 p.m., this next candle started at 6 p.m., the next candle started at 10 p.m., right? Now, oh, by the way, if you see this paper trade I took, upper wick, it's not that big, but big enough that it spiked my or interest, I mean. Now the different time frames. 4-hour time frame, there's the daily time frame, weekly, monthly, 6-month, right? And then you have your really small ones, 1 minute, 5 minute, 15 minute, 30 minute. Now, in my recommendation, stay away from the 1 minute and the 5 minute. There's nothing good there. It's all just noise, right? The 4 that you will work with, or at least that I use, and I highly recommend you use, is the 15 minute, the 30 minute, the 1 hour, and the 4 hour. Now, why do I say use these? If you're just trying to scout out levels, like for example, this right here, I see a supply level or a demand zone, right? It's really good to, just for example, I want to mark out this zone. 4 hour is the best place to mark out zones, right? Like for example, let's say in this one I was in for, let's just add another contract real quick, right? I'll partial out one here. Actually, okay, this is really dumb. You can't set partials in TradingView. For example, I would set that, and then let's just say I want to put a thing right there. So this is partialing. Don't worry about it if you don't understand what I'm saying right now. But I'll partial out one here, partial out another here. Let me actually put a limit. Let me close that out, and then let me do put this right there. Okay, let's just do that. So 4 hours really good for marking out zones, right? And then basically what I like to do is I like to go into the 1 hour to further refine my zones. Like for example here, I would probably set this zone. Actually this one I don't really need to change it much, but maybe I'll move this to here for example, which this is good enough. I'll leave it right there. But it's really good for like setting zones. Like right here, I focus this one up right into the demand zone. It's also good for, you know, trying to spot out possible setups here. For example, I saw this squeeze setup, and then squeeze is like a setup that you kind of want to scale down to 30-minute for. So but we're not going to get into that too much. So now while you're actually doing your trading, 30-minute is a time frame that you actually want to be in, right? Because 30-minute is the lowest time frame in my opinion that fully excludes noise, right? And what do I mean by noise? By noise I mean if you go into the 5-minute, right, and try to spot like signals, you're gonna get screwed over, right? You might see something, you might see a signal, right? Like you might see like the big upper wick and it doesn't end up doing what you expected it to do, right? For example, here you see a big upper wick, but price didn't actually go down, it went back up. Big upper wick and then just went back up. Basically what I'm trying to say is it's too unpredictable to be able to predict anything from the 5-minute time zone. You don't use 5-minute ever. You might use 5-minute for like a trailing stop if you're really scared, but we'll get over that. We'll get to that another time. 15-minute is a good time frame to look at, but you never act on the 15-minute time frame, right? For example, the thing that you would use 15-minute time frame is you see a 30-minute candle and you want to know more information about it. For example, if I want to look at this candle right here, this 3 p.m. candle, and see what this upper wick is, I'll go down to the 15-minute and I'll see the 3 p.m. candle was red, or green, I'm sorry, and the 15-minute candle after was a red candle, right? This gives me information as to what this upper wick means, and it gives me the information that, okay, this green candle has a big upper wick. Can we trust that price is going to go down afterwards? It's red right after, so the wick is from this red, so yes, we can trust that price is going to go down after, and that's exactly what you see happening after, right? The reason you don't act on 15-minute candles is, look, you see this huge upper wick. This is on the 345, so if we go to the 330 candle, which is this candle right here, you'll see the lower wick. The reason you don't trade the 15-minute is right there. If you were trailing stops, you would have gotten stopped out early when you could have potentially made more money, right? 15-minute is for information only. 30-minute is for actual trading. What dojis mean? So some candles you'll see have like almost a horizontal line, right? I mean, obviously if you zoom in a ton, you'll see a tiny itty bitty candle, right? When you see candles like this is what we call a indecisive candle, right? Or a doji candle. Basically what's happening is price has reached a point where it doesn't know what it wants to do, which is why you'll see a big upper, big lower wick. Basically, we've reached a point where buyers and sellers are both fighting. Now, normally when you see these candles, it means something big is going to happen afterwards, right? And over here, we see that price continues to go up. So dojis they give you more information. So for example, here you see how we have a red doji. This constitutes a doji and has a big upper wick. But since it's red and we see that price didn't actually go down that much, it wicked up, we can see that buyers tried to get the price up, but sellers managed to keep it down. But since we see it has such a tiny lower wick, we can infer that, you know, buyers are going to start taking control. And you can see that in literally the next candle, it practically wick fills. You know, that's something that I like to, that's something that I wouldn't enter on, but it's like a good sign that the next candle is going to be green. And doji, you'll see dojis everywhere when you start charting. Right here, green doji signals change of momentum. Let's see, another one, doji. You know that a big move is going to come, big move followed by another big move, and you'll see these everywhere, right? Doji, big move. Doji, big move. Right now, the next type of candles is I don't know the actual names for them. I think it's gravestone, hammers, stuff like that. Basically, candle with a, you see a candle body, very small or non-existent lower wick, big upper wick, right? This is a very good sign that price is going to go bearish right after, right? Especially if it's green. If it's red, the same still applies, but it's a better sign when it's green. So when the wick is above and the body is over here and the wick is bigger than the body, good sign that it's going to reverse and go red. Now let's see if we can find the opposite right here, a hammer. Red body with no upper wick and a relatively big lower wick, right? Signifies a reversal. As you can see right here, we have a big green candle. That's basically most of the important candles that you'll need to know. There's other things like the 3 candle pattern, but the 3 candle pattern is not that important because it's not something that you can necessarily trade just based off of, right? For example, here you see 2 red candles, but you don't see a 3rd red candle right after. Kind of signifies that it's most likely not going to continue bearish. That's one of those concepts that, you know, some people will swear by, but it never actually happens. It doesn't work. But what you can see here is our squeeze is starting to work a little bit, although it's too early to actually know because it's probably going to price reject off that line. So that's pretty much the basics of that. So now what I want to get into is how to spot supply and resistance, right? So I said in the last video, supply and resistance, what does that mean, right? Or not supply and resistance, support and resistance. What does support and resistance mean? Here, I'm gonna turn off my indicators really quickly. Support and resistance, right? For example, here, you notice how we have I'm gonna go into the 1 hour time frame actually. You notice how we have a line here that price, you know, comes to and it can wick below, but it can't really break. Goes up, tries to come back down, tries really hard, but it can't break this level, right? This is what we call a level of support, right? No matter how hard price tries, it can't break this line. It just bounces off of it over and over again. That's what we call a support line, and the same is true for resistance, right? Here might not be the best example. Let me see if I can find a better example, because I want to show you right here. See how we have a line here that price tries to hit but can't. It rejects off the line, it goes back down, tries to hit that line again, rejects again, comes up. This is called a line of resistance, right? And over here I had a nice squeeze that formed, broke the squeeze, and continued. So that's a line of resistance. Basically, think about it this way: if price can't break up past a line, it's called resistance. If a price, you know, comes down and bounces on it and goes back up, we call it a line of support. And you'll see that this is it's a very important concept. That is something that you will use very often. Right here, another sort of resistance. We see that price rejects here, it's having trouble breaking through, rejects here one more time before coming down and going past. Let's see, another support around here. We see price can't really break down below this, and actually if you see, I put in my thing here, we have a resistance that's respected here and respected here, and then it gets broken by a momentum candle. The only candles that can break through support and resistance levels are momentum candles, right? You're not going to get like just a regular candle breaking through it. It has to be a momentum candle. what are momentum candles? They're candles that come right after news events, or something I like to call the respect 3 times rule. I don't know if it has an actual name, I just call it the 3 times respect rule. So right here you can see that price came up, respected once, came up, respected twice, and then the third time it broke through, right? I don't know if I'll be able to spot another. Right here, respected once, respected twice, broke through, respected once, respected twice, broke through. You know, it might be hard when you first start charting to be able to spot these things, but that's basically the reason I say, you know, chart before you get into trading, right? Because your charting is so important. I think that's all I need to cover for the basics. Obviously, if I missed anything, feel free to let me know. I'll try to cover it. I think for my next video, maybe I'll get into how to either how to paper trade, or I'll do like a demo charting, or maybe I don't know, if you guys have any recommendations or suggestions, I'll get into that.